How many stocks should you own? Is it 1? Is it 10? Is it 20? Is it 30? Is it 100? Well, let's take a look at one of our positions in Alibaba and look at the performance year to date.
No, God! No, God, please, no! 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 No!
Well, it's probably not one stock, so we know that. Anyway, let's roll the intro and I'll go into my portfolio update and tell you the right number of stocks that you should have in your portfolio. So the markets have finally had a green day for the first time in quite a while. So today we finished up $66.90, or about 1% for the day. Portfolio value of $12,240.53 in our tax-free savings account. Past week we're down 73 cents, which is down 1%. In the last month we're down 2%, or $301.76. In the past 3 months we're down $41 year to date. Last year we're up $657.46, or 6%, and all time we're up $699.42. And if you want to follow along with my weekly buys and sells and any video I make, please subscribe to the channel, leave a like on the video, and please leave a comment. How many stocks do you think is the right amount of stocks to own? So let's get into the positions and look at the portfolio. So we have about $4.18 in the cash account. We recently just got a couple of dividends. We're going to be receiving a lot more very shortly. So we'll have that to deploy into the portfolio, increasing our future dividend payments even further. So Apple's trading at a pretty fair valuation right now. It's not a terrible time to pick some up, but I do think that there are better values in the market right now. And the big loser of the portfolio, my worst investment by far, you can call it my biggest mistake in the portfolio, we're down 44.95%. Now, there are a lot of reasons why Alibaba is down. They actually announced a lot of Chinese companies were going to be delisted. Now, Alibaba was not on this list, but it sparked a lot of fear in the markets that it could happen. So if they don't meet these, accounting standards that they lay out for foreign holdings to be listed on U.S. exchanges, they will be delisted, and that means they're going to be taken away from the market, and they will tumble down and be worth a lot less than they are right now. So there's a lot of fear around delisting right now. So that's at an all-time high. People are extremely fearful of Chinese stocks. They want nothing to do with them. And you can even look at the entire Chinese market in general. All the Chinese stocks are down. It's not just Alibaba by itself. And we do have a slowing Chinese economy as well. That's another factor in Alibaba. It's going to affect its growth rate because, if China enters a recession, it's going to affect Alibaba, who's primarily based, and it's a consumer-facing company, right? They sell consumer products. They're kind of like the Amazon of China. So if people don't have a lot of money to spend, or they're afraid to spend money because of a recession, then they're not going to grow as fast. They're still growing, but of course their growth rate has slowed down. So I definitely do think that the price drops are warranted, but not to this degree. So I mean, even if Alibaba's in a recession, I know that that's only temporary. And the Chinese economy, if you believe it will recover, I believe it will, then Alibaba will grow much, much faster. So I believe that the slower growth rate is just temporary. And we can see that in Alibaba's growth in the international markets, as well as its cloud computing services with Alibaba Cloud. So I'm optimistic about this one. That's why I'm not panicking. I'm not going to be selling it, but I'm also not going to be adding to it right now, just because I'm comfortable with the position size relative to my portfolio that Alibaba has. And this brings me to an important point about diversification. I think it's very important that you don't put all of your money into one stock, because let's say I did that. Let's say I put all of my money in Alibaba, I would be down 45%. So I put in like what, 11,000? I'd be down like $4,500 or $5,000 if I did that. So luckily I know better, and I did not invest all of my money in Alibaba, just a small part of the portfolio. It's definitely important to have more than one stock. So definitely, if you guessed having one stock is enough, I'm afraid not. So that's the reason you have other holdings in your portfolio in case you're wrong about your investment. I mean, in this case, it's just everything's just going wrong for Alibaba in the short term. You will lose a lot of money, and say I got into a bad situation, I needed to sell my stocks, and I had it all in like one stock, and it was down 45%. I'd be in quite a bit of trouble, and that could be financially devastating if I had, you know, my whole life savings in this one holding. Luckily, I don't. So things are okay. I'm not going to be adding to Baba for a bit. I'm going to buy some other stocks in the meantime, and when Alibaba is a smaller part of my portfolio, then I'll think about adding to it again. And my other companies are doing okay. Brookfield is down a little bit, but, you know, hanging in there, it's all right. Canadian banks are fine. The income funds are, you know, doing great. I mean, I don't hold these to make any sort of capital appreciation. They're just there to give me dividends and allow us to buy more shares, and hopefully at a lower price. So I'm actually liking this down market. It's actually fantastic. Every week I have to pick and choose what I think the best value is, and that's way more fun than looking at all my stocks going up and then thinking, oh well, what should I buy this week? I'm not really sure because everything's so high and so expensive. Instead, I have to decide what's the best value, and right now I think that's Google. So that's why I'm not really adding to Apple right now. I believe Apple's trading at a great value, so I'm going to continue to buy this company as long as it remains at these price levels, because in my opinion, again, I'm not a financial advisor or anything like that. Not financial advice. You're not guaranteed to make any money if you buy Google like I am, but I'm fairly confident that me buying it below 3,000, I will get a great return holding it for the next 5 to 10 years. So I'm going to be continuing to buy it every single deposit until it rises up, or, you know, some other holding comes back down and beats this in terms of, you know, just a good value play. I think right now, just a very solid company, very fast growing, very reliable revenues, and they have a lot of, you know, small bets. They call them like the moonshot division for you know, small things that they're investing in, and if it works out, they will invest more money into it. So kind of like their self-driving car service that they have. They have a few other things they're working on, really high-speed internet. So they're experimenting. So Google is, you know, going to make more ad revenue. They basically own the world, and they own YouTube. They own Android. It consumes everything. You use Gmail. Just what don't they own? Honestly, that's a better question. What doesn't Google own? And I bought a little bit more HYLD, so increasing the income of the portfolio every single month. So this is giving me an over 10% monthly dividend yield, and gives me exposure to U.S. stocks with 7 different ETFs that only contain U.S. stocks. And Loblaws has run up like crazy. I mean, I bought this at about 100, and then 2-3 weeks later, it's sitting at a 12% return. That's absolutely insane. I'm kind of upset about it, actually. You know, you think I'd be happy about a stock running up, but I'm honestly not, because when I'm starting to build a position in the stock, I actually want to get as many shares of it as I can. And when it just runs up like this, just out of the blue, it's very frustrating, because I'm like, oh, well, I missed my chance. I guess I have to wait for this to pull back, or I don't know, if it keeps going up to such a ridiculous level, I may have to think about like exiting this position and putting it into like a better value play, because if the value exceeds, you know, what I think the stock is worth. You know, I'm not going to stay in it if there's a better opportunity, especially in a volatile market like right now. And Microsoft is doing fairly well. They're down 6%. So they're recovering a little bit, but, you know, not a terrible time to be getting Microsoft. But again, I think Google is the better value compared to Apple and Microsoft. So that's why I'm focusing on that. And I bought another share of Power Corp of Canada. So I really like getting this at a 5% dividend yield. So this is the company that owns Wealthsimple Trade. And you can actually sign up for it in the description below. If you do it before March 24th and fund a personal account, you can get the value of up to 2 free stocks worth up to $4,500. So do that if you haven't started investing. Now is a pretty good time with a down market. You can get some cheap stocks and get some good dividend yields. So to answer the question of how many stocks is correct, Warren Buffett says that diversification is protection against ignorance. It makes little sense if you know what you are doing. Well, that would imply that, you know, if you really know what you're doing and you're really researching companies, you know, why would you have tons and tons of stocks? But I'm going to kind of disagree with this point a little bit and just say that diversification is a protection against, you know, unforeseen events and bad luck. I mean, if you pick 1 or 2 stocks and those companies fail catastrophically and it's not something you could have ever foreseen, this advice kind of, you know, falls by the wayside. So there are studies that say that, you know, anything under 20 stocks is considered highly concentrated and you're exposing yourself to single security risk. So that means the risks of owning a single company is too great if you're anything under 20. And then some experts say that between 20 and 30 stocks is the sweet spot for manageability and diversification for most portfolios of individual stocks. And this is kind of where I tend to personally lean. I just believe that with this number of stocks, you do get a good amount of diversification, but you can also keep track of your investments. And there's some other research that says you can have up to 60 stocks. That seems to mitigate volatility. Investors will achieve 89% diversification, meaning your portfolio is protected against volatility. Anything less than that can be detrimental to your portfolio. Now, yes, this will smooth out your returns, but you also won't be able to keep track of your stocks as well. So say there's some news about a company, you may miss some things just because that's a lot of positions to manage. I couldn't really imagine managing that many. And then there's some people that say, that owning individual stocks is way too risky. So for that, there are ETFs, right? So you can have a completely passive investing approach where you're not picking individual stocks, you're not researching companies. If you have no interest in it, or you frankly just, you don't have the time, you don't enjoy researching companies, then by just buying the S&P 500, a few all-in-one ETFs that are, provide global diversification is probably the way to go. You'll get a good return without any of the work. And honestly, this question of how many stocks will entirely depend on, your personal circumstances. What are you personally comfortable with? What's your investing goal? What's your investing time horizon? And, are you going to be retiring soon? Do you need this money soon? That's all going to affect, how you should invest and where you should invest. So do talk to a financial advisor if you need to, or just research it before you make any investment decision of any kind. And good luck out there, and let me know in the description below how many stocks you think is personally the right number. I say between 20 and 30 is just fine by me. That's what makes me comfortable and helps me sleep at night. You need to find the number that works for you.